Hey guys, this is Nick with Nick Does DGI and welcome to my channel. In today's video, I'm going to go over a major change I have made to the Nick Does DGI M1 finance portfolio, so stay tuned and I hope you like it. On a quick side note, one of my videos on ETFs caught the blessings of the YouTube algorithm and has seen crazy growth the past couple of weeks. I'm so incredibly grateful for those viewers and subscribers to my channel, and I am that much closer to getting monetized, so I truly appreciate everyone's support. As the video title shows, I have indeed bought some ARK Invest ETFs, championed by the much respected and legendary Cathie Wood. The same Cathie Wood who made the bold prediction in 2018 that Tesla stock would hit $4,000 within 5 years, representing a 1100% increase. And within 2 years, Tesla hit Wood's price target when shares closed at $816 or $4,080 on a split adjusted basis, since Tesla executed a 5-for-1 stock split in 2020. ARK Invest was founded in 2014 and is a global specializing in thematic investing and disruptive innovation. I want to specifically focus on ARK active ETFs, which have seen explosive growth since the beginning of the pandemic. Unlike passive ETFs like Vanguard, ticker symbol VOO, or ticker symbol VTI, actively managed ETFs are exactly as it sounds. They are designed to track a given investment manager's top picks in hopes of delivering above market returns, and in this case, these funds track Cathie Wood's best picks. And I love this quote from Cathie Wood: "Disruptive innovation is often not priced correctly by traditional investment strategies because people may not understand how big the ultimate opportunities are going to be. They aren't sizing the opportunity, and they aren't analyzing the disruption." ARK invests across sectors, geographies, and market caps, seeking to identify companies missed by traditional sector-based strategies, and at the time of this recording, there are 5 actively managed ETFs with a 6th on space exploration coming soon. But there's ARKK, Innovation ETF, ARKQ, Autonomous Technology and Robotics ETF, ARKW, Next Generation Internet ETF, ARKG, Genomic Revolution ETF, and ARKF, Fintech Innovation ETF. And out of these 5 actively managed ETFs, I have decided to start a position in 3 of them on the investment thesis that they will continue to outperform the S&P 500 in the years to come. And in total, these new positions represent 2.5% of my M1 finance portfolio. The first ARK ETF I added was ARKK, Innovation ETF. ARK defines disruptive innovation as the introduction of a technologically enabled new product or service that potentially changes the way the world works. ARKK is built on the cornerstone investments that present the best risk-reward opportunities from ARK's innovation-based themes. Some of the top 10 holdings include Tesla, Roku, Teladoc, Square, CRISPR, and others. This fund was created in 2014 and has a net assets of $17.6 billion with 0.75% expense ratios. The second ARK ETF I added was ARKF. ARKF chooses companies involved in the theme of fintech innovation or the introduction of a technologically enabled new product or service that potentially changes the way the financial sector works. Exposure to fintech innovations include mobile payments, digital wallets, peer-to-peer lending, blockchain technology, and risk transformation. Some of the top holdings include Square, PayPal, Zillow, Tencent, and others. All great companies that are at the forefront of innovating fintech. This fund was created in 2019 and has net asset values of $1.96 billion with a 0.75% expense ratio. And the third and last ARK ETF I added was ARKW. This ETF focuses on companies involved with cloud computing and cyber security, e-commerce, AI, Internet of Things, and etc. And some of the top holdings include Tesla, Grayscale Bitcoin Trust, Teladoc, Square, and Roku, and others. This fund was created back in 2014 and has net assets of $5.27 billion with a slightly higher 0.79% expense ratio. So why ARK ETFs? Why pay a 0.75 to 0.79 expense ratio fees for these ETFs when I can easily recreate these same ARK ETFs on M1 Finance for free? Well, the next image says it all. Here I backtested these 3 picks with the S&P 500 for the past 5 years, and as a baseline, the S&P 500 rose 109%, which really still is a respectable figure. However, all 3 ARK ETFs outperformed the market. Our first pick, ARKK, in gold yellow, rose a whopping 924%. And despite being created only 2 years ago, our second pick, in light blue, ARKF, also managed to beat the market at 199%. Lastly, our third pick, up here in orange, blew past the market at a crazy 986%. As a conservative dividend growth investor, one of my investing idols is Warren Buffett, the Oracle of Omaha, and he puts this succinctly. One of his core investing philosophy is knowing your circle of competence. Buffett said, "Know your circle of competence and stick with it." The size of that circle is not very important. Knowing its boundaries, however, is vital. So let's be real, I don't have a technical background in science, technology, or engineering, nor is it very efficient of my time and energy attempting to research and choose specific stocks in growing technologies and new industries. And really, that's where ARK ETFs comes in. They have brilliant, smart people whose full-time job is to research and pick the next winners in their respective industries. And for a small trade-off, i.e. the 0.75% expense ratio, I expect to receive market performances that far exceeds the S&P 500, and that alone makes it completely worth it for me. And in 2020, these ARK ETFs were the hottest funds of the year with over 120% plus performances, whereas the S&P 500 grew a respectable 16%. While I certainly do not expect to see another monster run in 2021, I am confident that they will continue to outperform the market. Lastly, these ETFs will continue to be a great addition to my dividend growth investing portfolio. Please note that this video is not intended as financial advice, nor am I a financial advisor. Past performance is no guarantee of future results, and please take the information with a grain of salt. Please do your own research and due diligence when deciding to invest in investable securities. I am just an ordinary guy posting his opinions onto YouTube because I love dividends, stocks, and personal finance. If you found this content useful, please consider clicking the like button and subscribing to my channel. This helps with the YouTube algorithm to get my channel noticed. Hit the bell notification to receive the latest alerts as to when the next video will drop. Bye!